Tell us about Hill City and how it fits into the Gap family.
So Hill City, let me talk, if I can, I'd love to talk a little bit about what Hill City is and how Hill City came to be. So let's talk a little bit about what it is, but I think it's worth noting that we did it in a non-big company way as well. Hill City is a men's performance lifestyle brand. We nurtured it inside of Athleta. It's been the most requested thing from our customers at Athleta is they want a men's brand that has the same values, the same performance lifestyle combination.
So you've got an interesting marketing tact. You're working on launching this in tech companies. You're speaking to the employees at Twitter. You're going to have a little store inside Facebook.
Correct.
Tell me about that.
Well, we really felt like the modern way of launching a brand is to connect to the ecosystem. And so we've got brand ambassadors who are wearing the product, testing it. We're soliciting people who can wear test the product and will provide us a real feedback, like how does it feel, how does it wear, how does it perform, and that kind of thing. And then we're launching it really very solidly on social media platforms. And we thought, why not just go pass through the social media platform to the people behind it? Because we're here in San Francisco, it's our target customer. And so we've been very connected in showing product to the people at social media, the engineers, the product managers. And now we're going to set up stores inside of some of these companies and let them experience the brand firsthand.
There will be show racks in Athleta stores.
Show racks in Athleta.
But really, it's online only.
It's online only.
What does that say about the future of the business model?
It doesn't say anything other than that's where we're starting, quite honestly. I mean, if you think about it, one of the ways this came to be is it's a very much of a startup. We starved it for resources, almost like angel funding. But it sits on a platform of all the capabilities that we have as a global apparel company. And so launching it online means that it's going to sit on our platform. It's going to be exposed to hundreds of millions of visitations that we have every year. So it's got the assets of a big corporation, but launched in a very small entrepreneurial way. It doesn't preclude stores downstream. You know, I'm a big believer in stores as an expression of the brand. 80% of apparel still goes through stores. So it's just the beginning, and we're launching it digitally native, is what I would say, which we think is the modern way to bring a brand to market.
What do you see as the future balance between brick and mortar and online? I mean, Gap closed, like 200 stores last year, but you also added stores for Old Navy and Athleta.
80% of apparel sales today for the industry still goes through stores, 80%. So that says something about the fact that people still want stores to try on clothes, to see it, to feel it, to touch it, those kinds of things.
What will that number be in 5 years?
I don't know. I wish I had a crystal ball. It's pretty foggy right now. But instead of trying to predict the number and drive the company to that, what we've really done is we've said we're going to make money wherever our customer is. If she wants to start on her phone and end at a store, or start in a store and end on her phone, we don't care because we are profitable across the entire spectrum of how she shops.
Sustainability was also really important.
It's a huge issue.
To you here.
Huge issue.
Talk to us about the materials and why.
B Corp certification. Athleta is a B Corp certified. Hill City is B Corp certified. And it's a why for two reasons. It's a why because our customers care about it, and that's important. It's part of the brand. And it's a why because the planet cares about it. Apparel manufacturing, as you know, through the whole chain, isn't the most sustainable industry. And we've been, I would say, probably at the leading edge of really focused on sustainability, whether it's water use, dye processes, good cotton where it comes from, and as well as bringing recycled materials back into consumer-facing products.
Etsy was a B Corp and dropped it. Have you looked at some of the mistakes they made there and in terms of your consideration of whether to go that route?
Yeah, we were pretty thoughtful, and I kind of played the, I think antagonist is the right word, as we were looking at this because I wanted to make sure that we weren't compromising the commercial proposition of the business as we did it with Athleta. I wanted to make sure that we weren't going to compromise profitability at the end of the day. And the reason for that is I feel super strongly that doing good that also does good for business is the most sustainable, and it's connected. And if you're just doing good because you believe it's a thing of the moment, the administration changes and you move on. I wanted this to be part of the business and to know that it was something our customers cared about and it was going to help build our brand in a profitable way.
That said, more sustainable material means a higher price point. Can you do good?
Not necessarily.
Well, this is my question. Can you do good and you keep prices the same?
Absolutely. Yeah.
How?
It's a false dichotomy, I think, to think about doing good, sustainability, et cetera, as adding cost to the business. And we've been able to do that with our back-end sourcing, working with vendors, bringing recyclable materials in. We've been able to do this on a cost-neutral basis.
Analysts use the word comeback when they talk about
comeback.
Gap. Is a new brand like this enough to ensure the comeback?
So it's interesting the word comeback, because if you look at our portfolio right now, our existing brands, Old Navy continues to crank along. It is a big, powerful, loved brand that is continuing to perform very consistently and growing. Athleta, you know the story on Athleta. We bought it when it was small. It's closing in on $1 billion and showing no signs of letting up right now. We've seen in the last couple of quarters excellent performance out of Banana as we've done product work there and gotten it right. We've been very forthright with what's going on inside of Gap and some of the operational missteps. So I sort of look at this and say, let's weight the message accordingly and say that we've got a strong portfolio of brands and one that we're doing work in, and then adding another brand on top of it. And to me, that thing of adding another brand on an entrepreneurial brand led by somebody with a passion for the business on top of the platform of capabilities that we have, that's the story that I want everybody to focus on in terms of what the potential of this company is.
Old Navy has been adding things like plus-sized assortments.
Correct.
How's that going so far?
I mean, plus is a significant percentage of the apparel market. We've added that to the assortment. We've had it online. We've added it to the assortment in our stores, really under the banner of Size Yes. Old Navy's whole brand ethos is about being democratic and inviting to everyone. And we felt that it was important to bring it from online into the stores. It's very early days. We're super excited about what our customers' reaction is to it. And we feel that, frankly, it's a big opportunity across in the entire portfolio.
Could Old Navy surpass the Gap brand?
Define surpass.
Well, as you say, it's got a huge following, it's got a
Yep.
great price point,
Yep.
and I know plenty of people who shop at Old Navy over Gap.
Yeah, I mean, they're two different brands, but we've been fairly forthright in saying the importance of Old Navy in our portfolio today. So if you look at size and profitability, it has already surpassed Gap brand. Gap brand is, and we know this because we've done the research, not just because I want to believe it, it is still very relevant to our consumers. But it's 50 years old, and brands morph and brands evolve. And we're doing work right now to really position Gap brand back to its core. But I love every brand in our portfolio. We've been very forthright with the investment community in saying that we're going to be responsible managers of the portfolio. And our job at the end of the day is to do many things, not the least of which is create value for our shareholders.
What about Banana Republic? You're in the middle of the turnaround there. It is looking up. What are you doing differently, and what is working?
So what we're doing differently is what we've done when Banana was at its best, quite honestly. We had a moment where we went into a bit of a tortured fashion phase, especially for the women's product. And Banana at its core, and this is a Banana, this is from the holiday collection, I pulled it out of the studio, Banana Luxe Flannel with stretch in it, the hand is beautiful. Banana at its core is about neutrals, about amazing fabrics, incredible hand feel, and versatile pieces at a slightly higher price point that are the foundation of his and her wardrobe. It's not a work brand, it's a life brand. And as we've really put product back in our stores, great fabrics, neutrals, on trend but not tortured fashion, we've seen the customer respond to it almost overnight.
So when do you see Banana being back at its best? 2 years, 3 years?
I think best is always something that you're aiming towards, and it's always something that you're going toward. But I expect to see a long run here of Banana continuing to grow and continuing to grow market share. I'm really excited about it. And if you think about it, what Banana is at its best is it is a extraordinarily high quality, well-made, and fairly priced alternative to contemporary brands. Mm-hmm. And that's really when Banana is really chugging along, that's what it's doing best.
I'm all about Safari Banana. That's my preference, Jesse.
We have a flight suit in the assortment right now. It is very cute. I actually showed it to my nephew's fiance, who was an F-18 pilot in the Navy, and she looked amazing in it. So.
Athleta, another bright spot.
Yep.
How big does Athleta get, and big enough to break out its own metrics like Old Navy, like Banana?
Eventually, we will break it all out, and that's something we talk about because we want people to understand the powerhouse that we have in that brand. I see nothing that will slow the brand down, quite honestly. It continues to be 50-50 stores and online, so it's truly an omni brand. Our customers shop seamlessly across the online business, the catalog, and in our stores. So I'm not going to call an end in sight, because there is no end in sight. We really feel like this is a brand that has very significant growth potential in front of us.
Now, part of what you've been struggling through is inventory issues. Is that working out? When will those, in your view, be completely behind you?
Yeah, inventory has been completely in line across the entire company, with the exception that we took some product out of Gap brand, less because we had inventory issues and more because we felt that the product was not on brand. So we took that product out. We've been forthright with the street about it. It's one of the reasons today that the stores feel cleaner and tighter, because there isn't as much breadth of assortment in there. But what we're missing is a little bit of sort of the color and the pop inside the brand. And we said quarter-over-quarter improvement. I'm looking forward to when holiday comes, because that's when, and we have a new president there, that's when you really see his fingerprints on the brand as well.
So what does Next Gen Gap, the parent company, look like to you, and how does it appeal to today's customer? What's that vision?
Of the whole company.
The whole company.
We're going to continue to grow our digital business at an accelerated pace. We've had excellent performance. We're going to continue to grow that business, and that's across the entire portfolio. We're obviously adding a new brand with this announcement with Hill City, and we're looking at other places where we feel that there are white space opportunities for us to participate as well. So I'm not previewing a slew of brands coming, but I do believe that we have an opportunity to add new brands onto the platform, either organically, doing it inside, or through acquisition. And we're continuing to look at what acquisitions might be for us as well. And then
what
growing
kind of acquisitions?
Acquisitions in places that where we feel there's a brand that is relevant in a white space, as an example. And we're looking at that. There's a lot of things for sale right now. Most of them are not things that we feel are appropriate to go out and make an acquisition, but we've always got our eyes wide open. And then growing in place. What's Plus? Plus in Old Navy is an opportunity to grow in place. And we see many of those inside of our core business right now. And then additional real estate. We've committed to store growth inside of Old Navy and inside of Athleta. We feel there is a significant runway in front of us, an additional store growth. At the same time, we're growing our digital business.
So you're looking to acquire brands that already have a strong following, a strong resonance.
I'd like 10 Athletas. Okay? Where it's a brand where it's relatively small, where it doesn't have a lot of stores, and it can benefit by, it's a space that we don't necessarily have a strong position in, and it can benefit by the platform capabilities that we have. That's kind of the filters.
How has Amazon impacted the Gap family of brands, impacted the pricing, impacted the merchandising, impacted the choices that you're making?
I would say Amazon has more impacted the inspiration for a great digital experience than they have actually impacted our business in a visible way. There aren't very many vertical brands that show up on Amazon. There are wholesale brands that show up there. We watch them every day. They do some things amazingly well, not the least of which is an incredibly low friction experience. So we look at them in terms of their capabilities and what they deliver to their customers, less about competing with them directly for market share.
Amazon did just add J.Crew Mercantile.
They did.
Is that competition?
We'll watch it and we'll see what's happened. That's J.Crew Mercantile is another name for their outlet product. I've said over and over again, I want to be where our customers are. And right now we feel like our customers are comfortable coming to us rather than going through a third party. But I will look at everybody out there. In China, as an example, we have an amazing relationship with Tmall. And they are the bulk of our online business. And we know our customers, we make money, they respect our brand. And those are really important filters for me.
Would you ever add a Gap brand to Amazon?
I'm never going to say never on almost anything.
We did see a report earlier this year that Amazon's fashion business is stealing market share from Target, Walmart, Macy's, JCPenney, and Old Navy. So is it impacting at all the styles you're offering? Is it impacting the pricing that you're offering?
So I would say that most of those names that you named were department stores. And if I'm a department store and I'm selling the same product that other people are selling, then I would probably be worried about that platform. Obviously, Old Navy, Gap, et cetera, those are all branded products. And you can't get Gap or Old Navy unless you come to our stores. In Old Navy, we are gaining market share. And we've been pretty open about that across key categories and gaining market share as a brand in total.
The CEO of Target said this is the strongest consumer environment he's seen ever. Is that something you're seeing, and how are you taking advantage of it?
Yeah, consumer environment is a broad space, obviously, and Brian sells a lot of stuff other than apparel. We are seeing a quality apparel market right now. It's obviously impacted by weather, but we see no issues with respect to consumer confidence affecting our business.
That said, in my experience with Gap and Old Navy, big sales are routine, 40% off, 50% off. What's the strategy there? Does that dent margins?
Of course it dents margin. The strategy there, it depends on the brand. So if you look at Old Navy has built its business model around, and this is really since the beginning of time, around a promotional model. And our customers expect the fact that we're going to have those sharp price points and those sales. And I expect to see that continue on an ongoing basis.
But it's at Gap too, and Banana.
It is.
And you almost don't want to buy it.
And
the sale isn't happening.
And it's not at Athleta. Athleta is largely a reg price brand. As we've seen the product improve inside of Banana, we've actually notably backed off on our promotional discounts. And with Gap, we're trying to walk that fine balance right now between keeping the product moving and managing our promotions. So I don't like the promotional environment that we're playing in. Some of it is self-inflicted. Some of it is that's what the industry's moved to. And a lot of it is driven by the fact that you continue to have competitors who are over-inventoried relative to their traffic. And at the end of the day, those units got to move out the door. And that's where you get the 40 off, the 50 off, the 70 off, et cetera.
CPI data showed actually a sharp drop in apparel prices last month. What do you think was behind that?
Typically when CPI shows a sharp drop, it's a function of mix rather than prices. And we have obviously had as we've gotten through August and into September, it's been warm, which probably meant that there was a mix to summer product and stuff like that. We're not seeing any significant pressure on prices, just by key items across the board.
The U.S. is in the middle of a trade war with China.
That is true.
Apparel hasn't been hit yet,
but is also true.
Consumer products are about to be.
Yep.
How does this impact Gap?
We're watching it very, very carefully, as you can imagine. This is a trade war, to be specific, that is largely confined to China right now. China has not been our largest country of origin, although it is for many others, for quite some time. We've moved and diversified our sourcing base. Vietnam is our largest country of origin. But some things will be impacted if this continues to go that direction. So we're looking at counter-sourcing in other environments, other countries, and then we're looking and saying, what's the implication here, and what's the consumer going to be willing to pay at the end of the day? And that's the big issue that I think everybody should have as we're moving down this path, which is what this will ultimately be, we think, is a tax on the consumer. And it's unfortunate that this is going to impact consumers, especially as we're getting into the holiday period.
So Apple has said they would raise prices on the watch, AirPods, if they got hit. Would you be raising prices on clothes?
It's something we're looking at right now. And again, it really hasn't impacted it at the moment. But our job, obviously, is to continue to deliver the performance of the company. And I think in some cases, we'll have no choice but to pass the impact of these tariffs through to our consumers.
About 22% of your products are sourced in China.
Correct.
Could you shift that? And are you considering shifting that?
The answer
over
is
the longer term.
The answer is, of course, we're considering shifting it, and we've been doing that for a while. The whole apparel industry has been in a race to the bottom to find the cheapest labor rates. A lot of that ended up in Bangladesh. We modestly source in Bangladesh due to the working conditions there because we require our factories to be certified. But we have been moving with our vendors into other countries where you can get a combination of the productivity and the labor rates. So we see continuing to downtrend China. But there are some items that China is advantaged at, like sweaters and some other things. And so we'll work with our vendors to figure out what we're doing from a footprint standpoint.
You mentioned wage costs. So, you're dealing with higher wages, higher transport costs, tech spending, marketing. All of this hits margins. What are you doing in general to mitigate the pressure of that?
We have and I'm not seeing all of that in our costs. So those are a lot of things. But, petroleum goes up. It affects our costs for shipping things and ocean freight and that kind of thing. That's one of many reasons that we announced almost over a year ago a very significant productivity effort internally and a commitment to a $500 million cost goal. I've said publicly that I believe there is more than $500 million. I'm very pleased with our progress right now. Some of that we'll spend on reinvestment, and some of that we'll use to offset cost increases across our business.
So what are your holiday plans?
What are me personally, or?
You'll be going to Aspen.
No.
Then
No, but
Bali.
I'm hoping we have good snow here in California and I can get some snowboarding in. Our holiday plans are always what they are, which is holiday is big for the company across all of our businesses. We do a commercial plan that's 12 months out. We feel like we are coming out very strong. I was just going through it with Old Navy yesterday. Old Navy has jingle jammies lined up, which is fun. They have 6 million cozy socks last year that they bought, and we bought 12 million this year. So we're coming out to fight and win, and that's what we intend to do.
This is another time of aggressive promotions across the board.
It is.
How do you make sure that doesn't put you in a bad position?
You're anniversarying aggressive promotions, but part of what we also do is we work with our vendors months in advance to engineer price points on products that are sort of at the point of the spear of those aggressive promotions. And that really helps us protect margins across the bulk of the assortment.
From what you're seeing, a strong consumer, despite some political uncertainty, how strong do you expect the holiday season to be compared to previous ones?
There's always the wild card of weather, which is our default. When nothing else matters, we go back to weather at the end of the day. But I'm expecting this to be a good holiday season. Now, if something happens in the midterm elections, because we did see instability around the elections almost 2 years ago, that might rattle consumer confidence, but we're planning for a very solid holiday period.
Now, you and I first met in a conversation about diversity, and I know this is really important to you. Gap is the only retailer to make Bloomberg's Gender Equality Index, which is based on salary, employee breakdown, policy, et cetera. You were one of the first to release your global factory list. Do you think that these social commitments will actually drive your business? And are they actually driving your business?
I think it's a combination of things. What I don't think is that the consumer is willing to pay more for the values of a brand. What I do believe is I sort of look at it as it's a gift with purchase. Because if we have all of that social stuff that is good, but the product isn't on trend, it doesn't fit well, it's not cute, then the consumer is going to go across the street and go someplace else. So to me, on trend, fits well, it's cute, it's fairly priced, plus it's sustainably made, and there's a culture of diversity and equality. I think that absolutely matters to consumers, and I think it manifests itself in the form of loyalty to brands. Especially younger consumers vote with their dollars and they care about brand values. Again, not at a premium, but I think all things equal, they absolutely do care about it.
Gap brands touch so many different kinds of customers. When you're building the company, when you're building your own workforce, do you see a direct link between the composition of your team and the diversity of the customer that you're able to reach?
Yeah, and that's really the other side of these values, is that it's an important component of our employee value proposition. We are able to attract people here, especially here, the Bay Bridge in the background, sitting in ground zero of tech, and we have a huge tech business inside this company. We're able to attract people partly because of the values that we have as a company, and that diversity that we have inside this organization, it does manifest itself in showing up in front of our customers better. If you have a point of view, whether it's racial diversity, gender diversity, or whatever, I think that is exceedingly important in a product like ours where the products are inherently emotional.
Do you have any examples of where you made a tweak, or where you had a shift on one side and you saw the shift on the other?
Part of it is, let's go back to Old Navy Plus, okay? This is a company that has not had a significant presence in the Plus product space. It's a missing opportunity for us. And, we have a wide range of body types inside of this company. And some of the people that were most passionate about this are people who I would meet in the elevator and they'd say, I love this company and I love our brands, but I can't wear our products. And there was a lot of passion from people with more diverse body types in saying, let's open up the aperture of our products so that we can connect with more people out there. And fitting in Plus, fitting in any clothing is difficult, but there's an art and a science associated with it. And so having people in the building who wear the clothes every day is super important to getting it right.
part of caring about diversity is being willing to do the hard work where it's not working and acknowledge the bright spots. You've got 69% of store managers are women, 74% of global employees are women. That's not the only measure of diversity.
Yep.
But where do you think you're doing well across the brands, and where do you want to do better?
So I think we're doing, from a gender standpoint, I think we're exceptional. And you noted that we have externally audited pay equality, which I'm really proud about. I've got 4 kids. 3 of them are girls. And to be able to lead an organization that has that, I think it's an excellent example, starting very personally for me. I think we still have work to do on racial diversity, just in terms of representation. Not equality, but diversity. The fashion industry hasn't historically been a significantly racially diverse industry, and that's something that we're working on. And then I also look at my board, which sits on the top of the company, and I want to have more diversity on my board. And it's something that I'm very much connected with my chairman, our governance committee, and the whole board on continuing to add diversity to our board, both gender diversity and racial diversity.
Fast fashion is all the rage now. It's not known for being socially conscious. You're competing with companies that aren't even based in the United States. You're competing with Zara and H&M. And how do you continue to compete but maintain all of these other values at the same time?
Well, the first thing is, so fast and fashion, we have gotten way faster, and I've talked about that a lot, and it's manifesting itself in our business. And then the second thing is again, back to this issue of, we don't find that our values come at a cost. We find that our values, frankly, come with a benefit. And we're not spending a ton more money on pay equality and all of these other things, and we are able to attract better quality talent. So I think, again, it's a false dichotomy that it's you have to sort of invest and impact the bottom line in order to be a good citizen of the world.
How do you get faster? What are you doing on the back end?
On faster. So let's talk about what faster is. Faster is thought bubble over a designer's head that boho tribal is going to be in spring, okay? And then when's the product on the shelf? And I'm not predicting boho tribal, by the way. I don't even know what boho tribal actually is. But faster is a lot of things. Faster starts with, we had a lot of excess time in the system, so we've taken that out. Faster continues with, we commit to our fabrics before we release a PO to a vendor, so that the vendor has those fabrics and they can cut and sew into them immediately. That right there takes 16 weeks out of our cycle. Faster can be that when appropriate, we air product. So today, coming from Asia, product spends 4 to 5 weeks on a vessel. If we air it, we can have it in our DCs in a few days. And so it's unfortunately what it is, or maybe good what it is it's not like one giant thing that you do and boom, you're faster. It's you take time out here, you whittle some time out there. You know, now we're sending, we're just beginning to send our fit intent back and forth and do it via 3D video connection versus sending a garment overseas by DHL and then having it go back and forth. So it's all along the way. It's a day here, it's a week there, etc. But it yields things like, you know, Athleta in this building where we're sitting, they used to be at 60 weeks, 60, to get bottoms, you know, all their workout pants and things like that back in the stores. We're under 10 now. And so it's huge changes that allows us to be much more close to our customers and what they want.
You are competing with tech companies for talent.
We are.
In San Francisco.
We are.
Excuse me. Facebook, Google, Salesforce, Uber.
Yep.
What's the value proposition when they're getting paid a lot, housing prices are astronomical, and talent is in short supply?
Talent is in short supply. That's absolutely true, and we are competing with those people. So what's our value proposition? First, we make real things. People do connect with our brands and with our products, and a lot of these companies are not making things that you can touch and feel. And so part of it is people are connected to the brand. They love the products that we make. The second part is you can work here, have a fulfilling career, do great work, and have a life. And that's important as well. And we're very focused and intentional about our value proposition. And then we've opened up a campus down in the South Bay, so it allows people to live in more affordable places. We have a great building down there that we're just starting to populate versus coming into the city. They can live farther east or farther south. So it's about a bunch of things and being very intentional. But the competition for talent here is fierce and relentless.
Now, as a leader, How far do you think out? Are you thinking, what does this company look like in 2 years, 5 years, 10 years?
I'm thinking, how are sales today? How's the weekend going to be? How are we going to finish the year? 2 years out, 5 years out, and 10 years out. And I think any CEO has to be able to toggle between the here and the now and really lift your eyes up to the horizon and move pretty seamlessly back and forth. So let me give you an example of 10 years out. There is just starting to be capital, AI, robotics, machine learning that's coming into clothing manufacturing.
In 10 years, it's not going to happen for 10 years?
It's happening now.
Okay, it's happening now. Okay.
Maybe we'll start to see it more materially in 5 years. But if you think about the implications of that, clothing has always chased the lowest cost labor. When capital starts to displace labor, then we expect the fact that there will be in the future more nearshore or onshore manufacturing. And that will be what brings garment manufacturing back to the U.S. when it's capital intensive. Because that's where we excel as a manufacturing economy here. And so that's a 5 to 10 year issue. It's not a 2-year issue or a next week issue, but it's going to be important as you think about supply chain evolution, about responsiveness, about speed to market, and that kind of thing.
But you think apparel manufacturing will be back in the U.S. in 5 to 10 years?
Already we're seeing, not ready for prime time, but we're seeing some 3D garment production, where you essentially have 3D knitting machines, seamless knitting machines, and that is something that you can locate here, Salt Lake City, Madison, Wisconsin. So yeah, I do expect the fact that we're going to see continued evolution of the supply chain as robotics and technology comes into clothing manufacturing.
So last question. Let's take a slightly shorter time horizon. What does Gap look like in 5 years?
Gap looks like in 5 years. We have additional brands in our portfolio. We have an amazing digital business that maybe at that point it's 50% of the company or 60% of the company. We probably have the same number of stores, but different. And maybe stores that aren't as big, and maybe stores that have more technology in them. We have a full suite of digital capabilities that our customer uses for their shopping, buying, and fulfillment experience. And we have an exceptional experience that is truly omni-channel across all of our brands that allows the customer to engage in a high-touch, low-friction way.